And we should be live. Welcome to Thoughtful Money. I'm Thoughtful Money founder and your host, Adam Taggart. Welcoming you back here on another Wednesday for another Wednesday recap of all things precious metal and sound money related with my good friend, Andy Schectman, CEO, co-founder of Miles Franklin, which is the endorsed precious metals solution by Thoughtful Money. Andy, how are you, my friend?
Adam, I'm great, buddy. It was wonderful to see you in person last week at the Rules Symposium, and appreciate the invite in here today. Thanks for having me.
Well, you beat me to the punch. I was going to say how wonderful it was to finally get to meet you in real life as well, or IRL, as the kids say these days. Folks, we will hopefully be joined, hopefully relatively soon, by Jason Cozens, the CEO of Glint, or Glint Pay. A little bit of uncertainty whether he's going to be able to join us or not, but hopefully we'll bring him into the conversation. If we don't get him this week, we'll hopefully get him next time. A couple things I want to talk about with you, Andy. One, and this is the reason why we're pulling Jason in, is I think Texas just announced that they've passed legislation recognizing gold and silver as legal tender within the state of Texas. That's one of a number of states that have over recent years passed similar legislation. So there's this building movement amongst the states to basically return gold and silver to their true monetary status, where you can use it for things like paying your taxes, but also eventually, I think, just any sort of commercial transaction. I'd love to get your thoughts on that. I know that you and Jason have been pretty directly involved in the action in some of those states there. So we'll get to that in just a little bit. But I do want to say, Andy, it was so nice to meet you. One, because it's just fun always to meet somebody that you've known virtually in person. But two, you gave a really interesting presentation. I was kind of frustrated because I was the MC for the bullion panel, or the bullion session that you were speaking at, and my duties kept pulling me in and outside of the room, so I couldn't see your whole presentation, but I caught parts of it in the interim. And basically, what I took from you is you're saying, hey, look, the BRICS threat to the U.S. dollar is real and not to be dismissed. And you go through a whole bunch of reasons why. I don't think we have enough time to do that justice in today's conversation, but I wanted to flag it because if there's enough interest amongst the audience in that topic, and I'm going to guess there is, we'll find out in a second to see how people react in the live chat. Maybe the next time you come on, Andy, we can really do a deep dive into that. You can pull up your slides and everything and go through that presentation for folks.
Yeah, I'd love to. Without getting into it, I've covered it to the tune of over 4,000 YouTube videos since 2019, and I will comfortably and confidently say I was, if not the first, certainly pretty darn close to the first one in America that was beating this with a stick over everyone's head. And the information that's come out as of late, in my mind, massively ignored and underestimated, might be the biggest news I've heard since I started covering it. And I think it's a mistake to not understand it, and certainly to underestimate it, I believe, is a huge mistake. So I would love to do that if there's enough demand. Color me interested if so.
All right. And folks, if so, let us know in the live chat here, or if you're watching the replay in the comment section below. If demand's high enough, we'll try to do that next time Andy comes on. The other thing I wanted to say about how fun it was, Andy, getting to meet you in person, is you and I have gone back and forth a bit here on camera about how much we appreciate each other and have admired each other's work for a while. It was so nice to see how well respected you were, not just by the audience that was there, who I'm sure knows you from your internet presence, but really more from the other panelists on the bullion panel. These are guys who are running what some might say, competing companies. But one, there's just a nice camaraderie amongst you. But two, I was speaking while you were speaking, I was sitting with a fellow who was going to go up after you. And he just couldn't have said the nicest things about you. And then I learned you guys were going off to play golf afterwards. It really speaks a lot when your biggest competitors think so highly of you. So I just wanted to give you that public affirmation of that.
Shout out to Rich Checkin of Asset Strategies, and he's been a very good friend, as has his uncle, Michael, who I've known for the better part of 25 years. We were both tied into the Swiss insurance industry through Swiss Investments, a company called BFI Consulting, going back almost 30 years. And They're very, very, very wonderful people. And you're right, there's enough business to go around, and it's better to I go to these shows, Adam, largely for that reason, because it's the people within the ecosystem that I think it helps a lot to not only have camaraderie, but to learn from other people, to solidify friendships with other people that are in the industry. Guys like yourself, guys like Rick Rule, guys like Rich Schectman, and many of the others. Of course, I like to talk to the customers and the clients and whatnot, but in my estimation, success comes through relationships, and it's added a tremendous amount to my success in forging those relationships over 35 years. I think it in many ways defines my success. So I appreciate you acknowledging that. And yeah, Rich Chekin and I did play golf, and he and his company are amongst the class of the industry. So I have no problem understanding and recognizing that's what good business is.
All right. Well, look, one last thing before we get to the meat of the discussion today. I'm going to pull you up full on the screen here, Andy, to show your new studio. Miles Franklin has invested in a great new multimedia studio. I know you've got your media partner there, Michelle. Pronounce her last name for me.
Michelle McCory. Many people will remember her from running Kitco's media presence, and we couldn't be more excited to partner with Michelle and have her run our new media division. In fact, her and I will be doing our first podcast later on this afternoon, but she will have a full very expansive slate of guests, hopefully yourself included, that will be very wide-ranging, that will be very open-minded, that will look at all three sides of the coin, not just the front or the back, but the edge too, and find where you fall into things somewhere on one of those three sides. So we're very, very, very excited to have Michelle, and thank you for acknowledging that.
Oh, well, look, again, congratulations on that. I look forward to watching. I'm sure a lot of the audience does here too. If I'm fortunate enough to come on the show, I'll try to do right by you guys, Andy. Hey, good news, two things. One, as expected, a lot of interest in that BRICS presentation, so we'll make sure to schedule that, Andy. Secondly, we are now joined by Jason Cozens, so his timing is perfect here. Jason, how are you?
I'm great, thank you very much.
Hello, Jason.
Thanks so much for joining us. Jason, I let the audience know that was very interested to have you join us today. One, because Glint's an interesting solution, and if we have time at the end, we'll talk a little bit about it. And at some point in one of these Wednesday sessions, I'll have you on by yourself, and we'll do a real deep dive into Glint and the whole Glint Pay ecosystem. But the topic I was most interested in talking about is the growing movement that we're seeing across a number of U.S. states in passing new legislation that recognizes gold and silver as legal tender, as currency, and really kind of bringing precious metals back to their true monetary role. And I know that you've been directly involved in that in several of those states, as has Andy. So I thought it would be fun to really just sort of get hear from the trenches from you guys in terms of what's driving this. Why is this a building movement for sound money? I think most of my viewers here are excited to know that this is going on, probably hoping that their state, might follow suit. And I'm very curious to hear where you guys think this ends up for gold and silver. Does this actually change things at a federal level at some point here? So anyways, we can dive into this any way you like, but maybe Jason, since the audience doesn't know you yet as well as they know Andy here, if you could just give maybe just a quick 30 seconds background on yourself, your role at Glint, and then just tell us how you got plugged into this movement in the States and what your level of involvement has been to date.
Yeah, sure. Thanks, Adam, and nice to see you both. It's always great to talk to you. Titans in the industry, but quickly about myself. So I'm the founder and the CEO of Glint. Glint is the first company in the world to enable physical gold that's really in the vault and insured by Lloyd's of London to be able to be utilized in transactions, electronic transactions, real time at the point of sale. So literally with your app, your MasterCard, you can actually spend your gold when you need to, because I firmly believe that, sound money is something you should be able to spend as well as save. But yeah, I came to this because back in 2008, I sat in front of the TV as the world came to the brink of a complete financial collapse in the system, and it was the first time I realized that the money in the bank is not really there. There is no money in the bank, and that my money depreciates in ways outside of my control. So I learned about the destructive effects of inflation, and also that gold had been money for thousands of years and had backed all of our money until 1971, when Nixon took us temporarily off the gold standard. So I set out to set up Glint, and I'll go straight into this into the U.S. Constitutional gold and silver currency. I mean, I think in a world that's drowning in debt, constitutional gold and silver currency is the lifeboat. They're not just money; they're of course freedom in our pocket. And I first came about it quite by chance. I saw a tweet by some of the people really driving the movement on this in the United States about proceedings in the Texas Senate, where someone had said, look, when we pass this law and make gold and silver, electronic gold and silver legal tender, we're going to need a platform like Glint. And so I got in touch with them and found out that there was this whole amazing movement trying to do similar stuff that I was doing, but not from a technological side, but from the legislative side. And I found out that there actually, I think at the time, this was about a year and a half ago, 2 years ago, I think there were about 6 states that I knew of at the time that were interested in this. And as time's gone on, it's grown to 22 states. So half the union is either legislating, working on, considering or drafting, or in fact have passed or even signed into law legislation that makes gold and silver, bullion, that it can participate in electronic payments, legal tender.
So what's at the heart of that, do you think, from these states? What's the most common argument that the legislators that are bringing these bills up, what are they making? Is it your freedom in the pocket? Like, this is something we want to enable each of our residents of our states to be able to do? Is it more, hey, we just have concerns about the devaluation of the dollar, because of the deficits and the debt at the federal level, and we want as a state to have some protection against that? What's really driving this?
Well, I think all of those things, but the two ones that really stand out, or 2 or 3, is $37 trillion worth of debt, which you talk about a lot, of course, as Andy talks about as well, not including even the unfunded liabilities like Medicare and Social Security. I mean, that's extra. That itself, I think, was declared by the U.S. Senate as being a matter of national security. So, if it's an issue for the Senate of the United States of America and they declare it a matter of national security, it certainly is a matter of state security, the problem around that debt. But then what do they do about it? A lot of that's out of their control because, of course, this is at the federal level. The next thing, of course, is the destructive effects of inflation that I mentioned as one of the reasons I got into Glint in the first place. And it's absolutely, shocking that people's hard-earned money has this stealth tax, which is predominantly caused, in our view, by significant money printing at the federal level. I think 20% of all US dollars in existence, as you know, were printed in COVID, in 1 year during COVID alone. And of course, that dilutes the purchasing power of money. There are other things. I think there are some states that are worried about federal overreach. But what can they do about any of this stuff? A lot of it surrounds and centers on the money and the nature of money. And on the face of it, many people might think, well, there's not much that these states can do, is there? But actually there is. And some people called it the hidden solution in the Constitution, but actually it's standing out pretty clearly in Article 1, Section 10, Clause 1 of the US Constitution, which actually forbids any state to make anything a currency except gold and silver. So this is a right that is already with the states. The states don't have to go and try and get this right. They have this right. And they think, well, okay, let's just bring sound money choice to people to allow them to save in gold and silver and not have the destructive effects of inflation, and not have to worry about not as much anyway, the national debt. Because of course the other thing which you've probably talked about on your show as well is that those closest to the money supply benefit disproportionately from those furthest away, beautifully explained by Cantillon. It's called the Cantillon effect. And of course, these legislators, these state representatives, closer to the people than anybody else, they're speaking to their residents, constituents every day, and they can see the effects it has, especially on the lower middle classes, and in some cases devastating. And so, it gives them, it's all about really serving those people. But of course, the first question people go is, what are you talking about? Gold and silver? Are you going to go into a coffee shop and chip off a little bit of a coin or a gold bar? And how's that going to work? It's not going to work, is it? And in fact, in 2011, Utah made gold and silver legal. They certainly made gold legal tender. It might have been gold eagles that are minted by the Fed. But the IRS carried on charging capital gains tax on those coins, even though the state had made it legal tender, which is their right. And the argument that the IRS had was that, well, you might have declared it legal tender, but let's be real about the Constitution here. What it was really talking about was the fact that we're making something functional money, and these gold coins are plainly not functional money in today's modern digital ecosystem. So I think when I met the people, incredible people at the Pirate Money book that was written by Kevin Freeman, which kind of explains all of this and was a great tool for legislators and people to understand how this might work, and his colleagues at the Economic War Room, who went tirelessly state by state, legislator by legislator, galvanizing grassroots activism. I mean, it was quite incredible to witness, a real privilege for me. But I think the thing that I'm very happy that I was able to bring to the conversation was to be able to stand up in front of legislators and say, look, it's actually really easy. Glint is an example of how this might work. We're already in America. We already have, I think, 60% of our clients are in the US. And look, it's really easy. I can show you how to use it now. In fact, let's pop down to the coffee shop and buy something with gold. And that was I saw time and time again, you may be speaking to a state treasurer. I mean, someone epic like Marlowe Oakes, who's, I think some call the US, the country's treasurer. He's got such a great reputation. We got to make this done. He walks out the room, of course, and then you're left with the deputy treasurer, who's the one who has to do all the work, maybe. He's like, hold on, guys, just slow down. We've got to give this plenty more time. How's this going to work, Hey, it's lunchtime. Is there somewhere we can grab something to eat? And you go and show it to them, and they're like, wow, instantaneously. Wow, you just spent with gold and anywhere in the world almost where this card's accepted. Wow. We've got to get this done as quickly as possible.
That's good to hear.
Yeah. So I don't know if that answers the question there.
Can I ask one question of you, Jason? Have you heard any rumblings of perhaps the federal government relinquishing the capital gains laws if indeed it is used in commerce?
Look, I think there's three. The Economic War Room guys came up with 3 T's, they called it, so it's easy for us all to remember, about what the benefits of the state are giving this movement, and why should the state get involved anyway? Because, well, something like Glint already exists. Well, those 3 T's are trust, taking, and taxes. So quickly on the first 2, you can imagine that like in Florida, you've got the legislation tasks the Florida Office of Financial Regulation to create rules around this legislation. We're going to go dive into the detail, and they're the ones that are going to be overseeing this, and that includes things like they're going to make sure the companies and the platforms running these electronic systems are of good standing, that they auditing the gold, making sure it's definitely in the vault, all of that kind of stuff. And so that's going to build a lot of trust. And the second thing is taking, of course. we know, but not necessarily everybody listening to this video will know, that actually owning gold between the 1930s and the 1970s was illegal for individuals. And so that was something that was set by the national federal government. So they can protect, because this is a state initiative, they can protect against that taking. And the last one, Andy, comes to your point about, well, this is effectively an authorized currency of the United States of America, albeit state ordained, which is possible because you have this wonderful system where the states can keep the federal government in check and vice versa. Well, that's certainly how the balancing is supposed to be. It seems to have been designed by the founders, and sometimes that gets out of kilter. And here we have the state doing that, and so they can stop the taking, but they can also they're coming in and saying, well, look, we're making this legal tender, we're making this currency, and by all accounts, then the IRS should have no choice to be able to let capital gains tax drop away. And certainly in Utah, where you had, for instance, the former vice chairman of the Federal Reserve on the committee studying this on behalf of Treasurer Oaks. I mean, you can't get anyone higher in the country than that, maybe, when it comes to what might happen. He was very positive in saying, people should have the choice to be able to save without having the destructive effects of inflation hitting them or unfair tax that comes from that inflation. And why shouldn't they be able to do that and they still be able to spend in dollars? Because the dollar is still the main medium of exchange on the planet, and they certainly believe it's going to be like that for a very long time. As to its capabilities or its power and being able to store a value, maybe that's what's driving some of this activity. But it's going to have to happen in one of a few different ways. There are obviously processes that back all of these tax systems. The IRS could declare themselves that because of this legislation being passed, that they see that they were going to drop capital gains tax. That is possible. Anything's possible under this administration, I think. I think the other idea is that Congress could decide to make an amend, and that might come through different ways. I think there's a few different ways, but I think one of them could be the president as an executive order. We don't know exactly how that might play out, but the point is that the pathway is now laid very clearly for the IRS to be able to drop capital gains tax, because it is the most immoral tax in our view, and a lot of the proponents of this bill.
Let me ask you this. This may be a very naive question, but I want to ask it in case other people have it in their heads too. Yeah. Which is, Jason, if I wanted to, and I think most people, based on their comments in the chat here, would not want to do this, but just as an exercise, if I wanted to pay my federal taxes with gold today, would the government accept it?
So federal taxes, I don't think so. I mean, the states don't have any power over the federal government. And I think one of the practical issues is that, of course, whether you're paying taxes at government or state level, there's whole IT systems and stuff that back all of those, all those payment systems behind the scenes there. And to be able to drop legislation on people and then say you've got to suddenly start accepting gold and silver in payment of your taxes, it's just going to clog things up and stop things. We all know how sometimes when things are done by the government, they're not exactly done in the fastest and most efficient way.
What?
As the Doge teams have found out. But some states have said that that the Treasury Department, the Department of Financial Services, whichever department is responsible for taking taxes, some states with their legislation have said they give the right to the Treasurer to give to choose to do so should they wish. And in Florida, they've said, well, you can do that, but as long as it's converted automatically to dollars.
Right,
at the point of transaction, which is similar to, with something like Glint. I have two choices. I can pay with my card. Sorry, just quick plug. That's our Glint card there.
Yeah.
I can pay with this, and the merchant, of course, receives dollars. He has no idea. It's like flying to London and you paying with your US bank account card. It gets exchanged from dollars into pounds in real time. The same thing happens with gold. into the currency of the merchant, whatever it is, with Glint. But then the second type of being able to pay is what we call peer-to-peer, the ability to send gold to another account as quick as and easy as sending a text. Mm-hmm. Now, we haven't switched that on in America for various reasons, which are, I think the regulations are becoming much clearer now and much easier to understand, especially with the state stuff. But we intend on switching that on. We hope that we'll be one of those providers of these systems. And I think in time, the state might very well not convert the gold into dollars.
Dollars to just keep it, yeah.
But that would mean they have to set like a gold account up. They'd have to talk to their ERP system provider, their software providers, and say we need a new currency on our platform. So I'm not expecting that for a few years yet.
Okay, all right. But where I'm going with this is, and by the way, Jason, again, I know we're kind of giving people little tiny bites on what Glint is in this conversation. I'll have you back on and we'll do a deep dive and let you be able to really tell everybody. But the point, the key point you're making for folks here, which is, look, a lot of this technology platform already exists to do a lot of the things we'd like to do. It's just not widely adopted by these state and federal players in the U.S. But my question was just more of a basic one, which is, as you said earlier, the Constitution specifies, right up front, that the only form of money in this country should be gold and silver, and yet I can't use it to pay my taxes to the federal government, right? So we're in this really weird state where we have this very clear directive, and yet the government is not operating by it, right? So maybe one day we'll get back to this if we end up continuing this movement towards a sound money standard. And again, the states themselves seem like they're leading the way here. A couple questions for you around this. So if I understand it, if I'm remembering the Constitution correctly, there are several ways in which we can amend the Constitution, and one of them is legislatively through the Congress. But another one is if enough states get together and force a referendum. And I think it's 2/3 of the states to force the referendum, and then maybe 3/4 of the states to approve it. A constitutional scholar can correct me here if I'm wrong, but it's somewhere in that ballpark. Is that potentially what we're building towards here? You said there are 22 states that already have, this legal tender recognition of bullion. They've either done it or it's in progress. Are we working our way to a potential 2/3 supermajority where the states could actually force this issue onto the table?
Well, look, I'm no constitutional lawyer, but I have been in the room and I've heard this type of thing discussed. And I think the general opinion that I've heard is that's a very dangerous route to go down. The ability to enact that kind of nuclear option can be used by any political leaning party, group of people, and the Constitution has stood the test of time, what's written in there. Of course, you've had amendments. But I think some people are, outright, even people behind this are very worried about using that process. But it's not my speciality. But yeah, I think that's the one thing I'd say I've witnessed.
So I'm just curious then, if you had your druthers, how would you like to see this movement build from here to the point where the government, federal government, starts adopting some of the reforms you'd like them to see? Is it going to be pressure from, within the states to their legislatures who are then bringing the pressure to bear in Congress? Or would you like everybody to write Trump and have it be an executive action? Like, how would you like to see this reform pushed through?
Well, I mean, look, I think that the first things first, like anything's possible, like in technology and in business, but it just depends on how much it costs, how long it takes. And I think what you've got to be careful of is that you don't try and do too much at the same time, because nothing gets done. Here we are. It's incredible. I never thought for one second that there would be state governments wanting to do this. This is beyond my wildest dreams, and I think we should get behind it and make it happen. I think if it was something that was the easiest way to getting capital gains tax removed from this, that is probably, now that you have we have 6 states now have passed laws to pass this into law. Is that right? About 6, let me think. There's Florida, Arkansas, Texas, Louisiana, and Missouri, 5. Utah did pass the law, but the governor for some reason vetoed it. But you have 5 states that have actually put this into law. It's now going through the process in some states, like in Florida, as I said, of rulemaking, etc. It's all going to be live very quickly. But I think the most important next step is to make sure the capital gains tax falls away. And for me, the easiest way for that would be an executive order by the president.
Okay. And just to let folks know, the reason why capital gains tax, we want it removed, is one, nobody likes paying it, obviously, right? And I believe it's taxed as a collectible. Correct me if I'm wrong, but I'm not sure if it's a traditional capital gains tax, but it's like a 28% collectible tax or something that's on it, right? All right, Andy's giving me the thumbs up. What we want to do is put it on par with the dollar, meaning in any given year, you're not taxed on a capital gain on your dollars, right? So we're just trying to give gold and silver the same treatment, right? That no matter what happens with their relative purchasing power, it doesn't matter because they're money and money shouldn't be taxed. Am I understanding that correctly?
Yeah, perfect on all of those areas, and I think, once you've got something like this in place, and effectively it acts as a mirror. And so it kind of, in a way, will hold, I'd like to think it would hold government more to account than it has normally. If you've got,
that's why government hates it.
Yeah.
Because it does act as a mirror, right? It's price.
Yeah.
Yeah.
But a lot of people,
that's what we as the populace would like, with that transparent mirroring, making it available for everybody. Hey, you're continuing to devalue our dollars because we can see the price of gold and silver just outpacing it. Yeah.
Yeah, it's the only barometer in the room that's actually giving you the right temperature. Everything else in the middle of the night, federal government comes and changes the scale. You think it's
now, I will ask at
really
some point in this discussion about Bitcoin, because the Bitcoiners are going to say, hey, that's what Bitcoin does too. Let me ask you this, and again, Andy, feel free to chime in any way, shape, or form here. So we're talking about these state reforms, this new legislation, really as a way to so far in the discussion, protect the individual, right? Put freedom in everybody's pockets. But the states themselves could also take steps to benefit, right? So in other words, they could begin to hold more of their state treasury in precious metals. And I know in Utah, Ken Ivory, who you and I have been in touch with, Jason, and Andy, I'm guessing you probably crossed paths with Ken too. I know he's pushed for that, and I think they even passed some legislation that the state's rainy day fund is some percentage of that is able to now be invested in gold and silver. So, we may see more of that happening in states, right? But secondly, this is kind of interesting in a state like Utah, where their number one export is gold, where they have gold mines in the country, so they could theoretically, have a state mining operation and a state treasury operation to go mine the gold out of the ground and then put it in their state treasury. So there's a way for at least some of these states that are blessed with gold deposits, if this movement continues, you can really advance your station here if you make this a priority. Is this correct, or am I just talking wild here?
No, you're not. And Utah actually, I think, was probably the most advanced in terms of the plans that legislators like Ken Ivory are putting forward and that the Treasurer was supporting. And in fact, their bill kind of got watered down as they came across some opposition to it within the apparatus. And you're right, they've got some great mines in Utah that are producing gold. They've even got their own LBMA refinery there, the Asahi refinery in Salt Lake City. So they've got the whole ecosystem. They've got it being birthed through the mining process. They've got the refining process for making it, the same standard as all tradable gold on the planet. They've got a vault there. So they've got for instance, there's a BRICS gold vault there, one of only, I think, 4 in the US. There's one in Miami with Andy, I know, uses, and I think he uses the Salt Lake City one. Don't you use that, right?
He does, yeah.
For your clients. So they've got everything, and so they've been talking about all kinds of things. As you said, they've actually bought up to now $100 million worth of gold for their state reserves. They are the first state in America to actually hold gold in the reserves.
And sorry to interrupt, Jason, but over what period of time? Is that relatively recently they've added, or they put $100 million in?
Yeah, so you were, I think, testifying there with them. The bill was passed. This is last year's bill, which instructed the Treasury Department to form a committee to study transactional gold, but also said the Treasury has the right to buy gold for some of the rainy day funds. And actually, Glint was very fortunate to be chosen as the company to be able to provide that gold to the state. And we did that with over about, I don't know the exact time, but about 6 months. And they still have some firepower in their ability to buy some more, I think. So hopefully that's a model for other states. I mean, it's pretty crazy that individuals, businesses, and the federal government are all buying gold, but the state wasn't allowed to. And I think we'll see more states, and I know of more states wanting to do the same thing. But actually, Ken Ivory is such an innovative man. He's talking to Judy Shelton, which I think certainly Andy knows, and maybe both of you know. They're talking about all kinds of things like gold-based bonds and stuff. That's maybe more your area than mine, but paying taxes in gold, all of this kind of stuff. They were all going for it all, and I think the governor was just worried about the technical implementation of this and was it possible. But of course, the committee looked into that and know that it is.
Right. So just want to give another shout out to Ken. Ken has been at this since I've known him, which has been at least 15 years. So he's one of these guys who's really been carrying water for a long time and just, a bulldog on this, just refusing to give this up. And it's been crazy to see how hard it has been and challenging for him to do this in probably one of the states that's most open to this idea. And there's still lots of obstacles, as you've just mentioned. And maybe just ask you to guess on this, Jason. You say it runs into opposition, right? Even opposition of the state owning precious metals. Like, who would be against their state owning some precious metals? What would the oppositional argument be there? Like, why shouldn't we do this, even as just a diversification standpoint?
So the good news is I've seen where it's done well, bipartisan support for this, which has been phenomenal, often unanimous, which is extraordinary. I don't think it's ever happened, that type of thing, unanimous support for legislators for this. But there is resistance, and people like Ken Ivory, as you say, big shout out to him. And he works tirelessly. They hardly get paid anything for the work they do as being state representatives. Mm-hmm. And yet I've seen literally through their blood and their sweat trying to work on things which they believe and their constituents believe, things that need to get done. But I mean, I think ignorance is one of them, and that was one of the first things. People wondering, are you talking about people going in to pay at a Starbucks with gold bars and coins? And are you going to force the coffee shop in Salt Lake City or in Miami to accept gold coins and silver? And is this going to cost the business more? All this type of stuff. And of course, it just runs straight away into a lot of, mud and clogs the progress down. So that for me is kind of innocent and ignorance, which is something you can deal with through education, and I was pleased to be able to help with that in that area. But sometimes, unfortunately, politics is a difficult world, and I saw in one state, where there was some horse trading going on. Well, I'm trying to get my bill across the line, and were you going to support mine?
Yeah.
Or you didn't vote for my last bill. Are you going to vote? Why should I vote for yours? And you're looking a bit big for your boots, and I think I need to knock you down a peg. All that kind of human politics stuff, which is the ugly side of politics, of course, gets in the way. But you know what? The people have spoken. They want this. I think in some states it became definitely in the top 10 most wanted to be discussed legislative issue.
Popular movements. Okay.
This is where people have the power, and you should use it.
Okay. And where I was going with the question was, I get ignorance, I get politics as usual. I was curious if, especially for things like, should the state treasury just own some, right? Which isn't as logistically hard as, okay, we're pushing this on coffee shops, right? Is there any opposition there that's kind of like deep statey or swampy, where it's like, hey, this guy's pushing back because, perhaps somebody in Washington is leaning on him saying, hey, we don't want this to come up to the federal level, so we're trying to kill it here?
No, I haven't seen that. But actually, you did remind me, the banks in some areas, in some states, the bankers were sending lobbyists in to try and kill the bills. And I don't know if that was swampy, deep state, but I mean, they came in pretty hard. And they definitely killed it in some states. They'd say things like, this is unconstitutional, this is against the law. You know, if you're a bureaucrat, you're going to go to jail. And this is crazy. And even when I try, you know, I think when people try to engage with them on let's try and get to the root of why you're trying to deal with this. Are you worried about deposits leaving your bank accounts? Is that one of the issues? Well, you need to understand two things. People have either moving their money out anyway. You know, they are already moving money out of your bank accounts to buy gold. I forget, I get these two numbers mixed up, but I think it's something like 36% or 48% of all Americans have already bought gold, and another 36% are considering buy it. There was a Gallup poll on this. You know, something like 28% of all people in America think gold is the most important investment. They're already moving money out of bank accounts. And of course, the interesting thing as of July the 1st is that gold's now been declared, certainly under the Basel rules, as a tier 1 asset.
Right.
And so banks, you know, should be able to speak to the FDIC, et cetera, and allow any gold that they have to count against towards their capital adequacy requirements. But that would require that gold to be sat on their balance sheet. And that's not quite the spirit of this movement, where the gold should be owned by the customers under their legal title, not the legal title of the bank with a liability to them. But that's a whole nother world. But yeah, the banks were quite tough in some areas.
Okay, and I can understand that. I mean, they for a whole bunch of reasons, but one is the vast majority of dollars are created through the banking system, and they probably don't want anything that's going to, you know, interrupt their advantage there.
Just straight off the keyboard, ex nihilo.
Exactly. All right, Andy, I got to thank you. This is the longest I've ever heard you be quiet. And I know that I'm sure that Jason has mentioned a number of things that you would like to pile on. So I want to take a breather here and just give you a chance to chime in on anything that you think is important for the audience to know about what we've been talking about so far.
I think Jason dots all the I's and crosses all the T's. I agree with all of it. And I think you can just look at this year as a prime example. The dollar's down 10% and gold's up 38%. So you're talking almost a 50% swing. And if the state were to have been holding its reserves in gold, it would be far, far, far better off from a standpoint of purchasing power than it would be just holding it in dollars. All fiat currencies are inherently meant to die. And the policies of this current administration center around a weakening dollar and lowered interest rates, which is inflationary. This is why the smartest money in the world has been accumulating gold hand over fist, that being the central banks. And I would add into it somewhere in the neighborhood of 100 billion with the B dollars that we know of, and I would argue there's probably a lot more that isn't reported, has been delivered into the COMEX market since November. And you're talking the most well-informed, the most well-funded, and the most sophisticated traders on the planet. Now, who is doing this? Who's got those pockets? And so, yeah, I think that there is no question at the highest level. And the only ones who would vote against that would be the banks, because it takes away, obviously, much of their power and leverage, as they've already seen a mass exodus of deposits leave the banking system chasing yield into treasuries. I'm sure the last thing they want is to see legal tender in gold, which would be a far, far, far more sound way of holding your wealth. And, you know, people get too focused on return or yield. There is no yield on gold, obviously, and they focus too much on that. But if you look at its performance over the last 25 years, it's doubled the performance of the 10-year treasury. So it doesn't need yield attached to it, because inherently what it does is it maintains your purchasing power. It sniffs out the stealth monetization or the stealth inflation that is inherent to the system and continues to move higher. Whether you look at last year, gold was up 40%, the 10-year treasury up 4.5%, or this year, the 10-year treasury up 2.5% halfway through the year, but the dollar down 10, you're negative 7% in the hole plus. Yet gold's up 38%. So when you talk about allowing the constituents the ability to get out of the way of irresponsible fiscal policy and arguably brain-dead monetary policy, it would be the best thing in the world for the constituents. Jason, am I wrong in saying that it was a unanimous bipartisan vote in Utah, but for whatever reason, the governor vetoed for the first time a unanimous bipartisan agreement? Am I wrong in saying that?
So it was unanimous, I think, in the House, and I think nearly unanimous in the Senate. And it's certainly certainly of his own party, the Republicans, was unanimous. And I don't think that's ever happened before.
His reasoning in that case, when you have the entire will of the people and the majority of the legislature saying, yeah, let's do this. The state feels it's smart enough to add $100 million into its coffers. What was the reason to veto the legal tender status for transactions?
Well, I think the official reason was that he didn't have confidence that there was a technical solution to it.
Yeah. Okay.
But, who knows what the real reason is?
Therein lies the problem with politics. But yeah, I mean, what you are doing, Jason, not only in building a wonderful business, but also in really representing sound money, and in many respects, the United States, the will of the people with the legislature is fantastic, and it's a growing trend that I think will continue to manifest. You're seeing it here in Florida. I spent time with some of the people in the economic war room yesterday on the phone going over all of this, and I think really this is a grassroots movement that is gaining momentum, certainly around the country. So it's exciting to see, and let's hope it gains some more traction. And rumors that I hear, and I won't substantiate them, but rumors that I hear is that there is actually a good chance, and someone that I would love to talk to, and certainly, Adam, you may want to try and get him on your show as well, as Representative Alex Mooney from West Virginia, who has passed these or tried to float these bills federally to remove capital gains taxes and to call gold, especially that gold that would be issued by the U.S. Treasury, the Eagles, money, and rightfully so. And for these bankers who claim it's unconstitutional, actually, they're wrong. The Constitution says it is treasonous to use any money that is not species, which is gold or silver. So it's, as usual, the bankers are self-serving and wrong. And guys like Alex Mooney, guys like you, Jason, and others who would much rather hold their money in something sound and stable. And let's not forget the overreaching risk that we see in an undercapitalized, over-leveraged banking system. Obviously doesn't want to see more of their deposits leave, but why would you leave your money in a banking system and in a currency that's being inflated, a banking system that's leveraged and undercapitalized and teetering and has bail-in legislation? I mean, it all seems that we're getting to that point. So yeah, I let's all hope. And this may sound corny, but hey, I suppose if you are in any of these states where they're considering it, and Jason, is there a spot to go to so people can see what states are considering this legislation? Because a simple contacting your legislature probably is a good idea if we are in any of these states where it is currently under, I guess you could say, review, or if it's in some sort of a what would it be, a panel or a council determining whether it's right for the state or not. Is there a place people can go to see where their state falls in here?
Yeah, I'm really glad you mentioned that, actually. The Economic War Room team set up a website called transactionalgold.com. That's transactionalgold.com. And it's very important, even in the states that have passed the legislation, that people get in touch with legislators and voice their support. I mean, for instance, in Texas, they didn't instruct the financial department to make this so, which is what they did in other states. In Texas, they have said that the comptroller, as they call them in Texas, has the right to be able to do this. And at the moment, there's a new candidate race that's just started because there's an outgoing comptroller of the currency in Texas. And so, I know that there are, I think, at least one candidate that's running his, ticket, so to speak, in wanting to support this. That's Don Huffines, I think he's endorsed by Ron Paul. But hopefully all the candidates will see that this was, as you say, a near, if not near unanimous supported bill and will want to get behind it. But in Texas, it's up to the comptroller to make sure this happens. So please get behind that. And as you say, in other states, the race is still on. In some states, I think it's Ohio, for instance, I think the legislative process is still underway this year.
Hey, Jason, did I get the URL right there for transactional gold? I've got scrolling across the bottom of the screen.
Yeah, that's right. That's it.
All right, folks. So if you're interested in that, go look at that. Maybe send it to your elected officials in your state and say, hey, we want to be part of this movement here. Jason, two questions for you here. One, one man's opinion, I'm skeptical. In other words, the banking system doesn't want this movement to succeed, likely for the reasons we've talked about. The banking system, hugely influential, hugely intertwined with DC, right? So it is kind of hard to imagine the banking system willingly saying, hey, yeah, let's let this happen, and let's have to live under the constraints that the system's going to place on us. Same thing for Congress, right? Congress people love the fact that fiat currency has removed the discipline that a gold standard once placed on our elected officials, and that budgets and deficits don't really matter because you can just continue to have the Fed invent more money out of thin air and finance the government, buy the government's debt if need be. So I do feel sort of like this is not something that's going to be like proactively pursued by the power structure. But we could definitely get to a point where there's enough grassroots opposition where we can force something about this, or probably more likely there's sort of currency crisis, right? And it cracks open the opportunity to look at this and say, whoa, wait a minute, we got to do something different, right? It's getting forced on the system. And what I value, just to echo what Andy was saying about you, what I really value about companies like yours, Winston Churchill had a great quote where he said, in a time of crisis, the option set that gets considered are the things that are already on the table, right? When you're in the threat of a crisis, you don't usually say, well, let's try something that's never been tried before. You say, well, let's look at the things that we kind of know and try to pick the best of them, right? And so what I see companies like you doing is trying to get solutions on the table now, so that if and when we get to that point where the system starts to break and they start casting around for a different way to do it, they can say, oh, well, you know what? There's actually this transaction platform that actually makes all this stuff really easy. We don't have to, it's removed a lot of the unknowns for us. So like Andy said, I just really want to give you, your full due as one of the pioneers out there trying to get really good potential new solutions on the table. So they will be there when and if we get the chance to look at doing things differently.
Well, thank you, Adam.
And I would like to chime in one moment. It's hard for me to keep quiet, Adam. You understand that, and I apologize. But
this is a three-way discussion, Andy. You come in anytime.
I've been sitting on my hand. I will say that I have devil's advocate in terms of perhaps the way the federal government looks at it, and I want to bring into focus Judy Shelton's argument of issuing 50-year treasuries, because, as we said earlier, we have that $37 trillion debt, but the unfunded liabilities, Jason's point, in Medicare, Medicaid, Social Security exceed $175 trillion. By the government's own admission, we're pretty darn well near $200 trillion in debt. There's no way to pay that off. You bring in Doge, well, at least right now there's not, unless we were to bring all the manufacturing home and grow our way out of it, which would lead to the Great Depression long before we were able to grow. But just for a moment, if I would, and that would be that if we take a look at this massive indebtedness, obviously, and you bring in Doge who points to $2 trillion in reckless spending that we could save, but yet Congress doesn't have the political will to do anything more than $80 billion, and that $80 billion that they agree upon is 38 hours of spending by the government, amounts to nothing. So to Judy's point, in a world where the Treasury bond is losing demand globally, and it is not, that's not something that's even debatable. How do you find demand in a country where Trump wants to raise the debt ceiling? There's going to be another $3 trillion deficit. We owe $28 trillion in treasuries that are coming due in 3 years. Yet we only take in $5 trillion in tax revenue. He wants to lower taxes, but not lower spending. That's a problem. And even if you don't lower taxes and you keep it at $5 trillion, that's $15 trillion. We owe 28, but that doesn't take into account the $3 trillion this year and whatever we do the next 2 years in deficit spending. The math doesn't add up. So how do you find demand for the Treasury bond in that environment without letting rates go parabolic to attract that demand? If rates do go that high to attract demand, what happens to stocks? What happens to bonds? What happens to real estate? What happens to the banks? At 5%, they started to break. What happens at 10? What happens to the insurance companies who are loaded with treasuries? It's called bang, the Great Reset, everything implodes. So enter Judy Shelton. You reshore all the gold. Oh, wait, didn't we just say we become net importers of gold? I think we did. Over 100 billion that we know of. You contemplate revaluing gold. Where is gold held? Oh, yeah, in the gold revaluation account. That's the name of it. You can't make it up. It's happened 3 times before in this country. Who would that benefit? Well, that would benefit every central bank on the planet, number one. It would also benefit the United States government if indeed it is the entity behind this massive, massive, massive month over month over month over month imports of gold at record levels, the largest import ever into the history of the COMEX on the May contract. Who's standing for delivery for almost 9 billion in gold? You put all this stuff together. Okay, Judy, so we peg a 50-year treasury to gold. Why? Well, because what that does, if you do revalue it, now James Rickard says 24,000. He comes up with that number by taking the money supply and dividing it into the gold that hasn't been audited since 53. And he gets this 24,000, which would give the Treasury general account 6 trillion free and clear. Treasury would issue gold certificates to the Fed, who would print the money out of thin air and give it to the Treasury. Those gold certificates give the Fed claim on the dollar value of the gold, not the gold that belongs to the people. So that printing of the money completely devalues the dollar, just like Nixon did in 72 and 3, and just like Roosevelt did in 33. Devalues the dollar, which is what they want to do, creates copious inflation, which is the lesser of two evils rather than default or hyperinflation, but it would create a lot. That makes it easier to pay off the debt, but that still doesn't deal with how do we get low borrowing costs. Well, we peg the Treasury to gold and redeemable upon maturity. Therefore, you can offer 0 coupon treasuries because that inflation hedge is the gold. It's not the 8 or 9 or 10% yield that would kill the markets. Boom, everything blows up. Instead, you peg gold to it. You got a 50-year runway. And then in that environment, because of the low borrowing costs, you inflate your money to pay down the debt. The Treasury gets $6 trillion under Jim's scenario to start paying down the debt. And then you start reshoring your manufacturing at a very, very low cost of borrowing, and you try and produce your way out of it. In my opinion, what the hell do I know? I think it's the only way that you can get out of this quandary we are in without either massive hyperinflation, which leads to interest rates going to the moon, which blows it all up, or quantitative tightening, which has interest rates go to the moon, which blows it all up. I think Judy's onto something. I think that would be the first step, would be to reshore all the gold. We see that. So I think what Jason is talking about has greater legs than people would give it credibility for. I don't care what the banks have to say about this. We are so far down the road that we've really run out of options. Inflate, you're dead. Raise rates, you're dead. It's time to think outside the box and unconventionally. And I think that's what Judy's whole theory is all about. And I wouldn't put past really a reasonable chance of something like that happening. So I just want to throw that out there and play devil's advocate because I see a clear path to this getting crazier than people would ever think in terms of where gold will really go and what the plans are by the administration to use gold, not to back the currency, but to back the Treasury market to keep rates low and incentivize demand for the Treasury market.
So, Jason, I'll let you respond in just a second. I just want to note on that. So, I've interviewed Judy Shelton, and we talked about the 50-year gold-backed Treasury that Andy's talking about. And what was interesting, Andy, is when I was talking to Judy about it, I mean, I really had the sense that she thought it was the right thing to do, and it's something she's been pushing for a good while. But she sort of describes it as the camel's nose under the tent. like this would be a first incremental step towards a lot of the things that we've been talking about today. What I hear you saying, Andy, is it might not be the camel's nose under the tent. Like it might have to be the tent. Like it's the only way that you can see this working out. So this little quote trial balloon of hers, you actually think might be the answer that the government has to pursue.
I do. I don't think they can back it to the currency like they did in prior to 33, where gold backed M1, which was not M2, which is the broader measure. M1 is the currency in circulation. But President de Gaulle from France proved something, and that is that convertible currencies convert. That's like Gresham's law, where the bad money chases out the good money. And I don't think they want to make it convertible on a currency basis. I think they'll sacrifice the currency. And unfortunately, a lot of people will suffer with higher inflation. But I think the only way to keep the system alive and to have any hope of bringing back manufacturing and growing our way out of this problem, because remember, Triffin's dilemma says if you are the world reserve currency, you will always run trade imbalances.
Right.
That's why Vice President
trade deficits, but yeah.
Yeah, why the vice president is saying being the world reserve currency isn't maybe so beneficial at this stage of the game. So the only way you grow your way out of it is to back the treasury. And if you start with 50-year duration, you're not going to have everyone sucking all the gold away immediately. So you have a lot of runway to let the price really rise so that when it comes time to redeeming those treasuries, it's not as painful as it would be today. To me, it's the only pathway to keep United States hegemony and supremacy. For our growing indebtedness, you need to find an avenue to attract a demand for the treasury market without letting rates go parabolic. To me, it's a genius idea that Judy has, and I can't see a clearer path other than something like that.
All right. And Jason, I'll let you go here just real quick. I want to let folks know that I'll be interviewing Judy at some point next month, but more importantly, she's going to be a featured speaker at the Thoughtful Money Fall Online Conference, which is going to be Saturday, October 18th. So note your calendars for that, folks, and we'll have more details on that as we get closer. Jason, anything you want to add to Andy's exposition there?
Well, just to reinforce what Andy said, that actually during the first quarter of this year, we actually could not buy gold in America because everybody, someone was buying it all up, as Andy said. And so you had to, unless you were willing to pay $72 an ounce premium, we were having to buy it in London and fly it into America.
What he's saying, he's talking the big bars that never have that kind of premium.
No.
And where are premium now? Have they come down to historic norms? Or are they still elevated?
Yes. Yeah, they have, yeah.
Okay. So I'm curious then, was it all tariff front running or was there something else going on? Like, Andy's point about an acceleration to repatriate.
I don't know, but I think it's a really good hypothesis, and I wouldn't want to argue against it. It was phenomenal. It's never, as Andy said, it's never happened before. I think the UK, as a result, UK's trade imbalance with the US changed because all this gold was coming out of the UK. I think there were headlines in the press here about the fact there was a 2-week wait to get gold out of the Bank of England. That's because the Bank of England is not a transactional vault. It takes time to get it out. It's not like a BRICS vault where it's going in and out every day. This was extraordinary. Extraordinary. The gold, and it wasn't just coming from the UK. The people with America, someone in America was trying to buy this from all over the world. Australia, Singapore, London.
And I think that the tariffs was a ruse. It made perfect sense. And that was the cover. If they knew that the U.S. government was trying to accumulate it for reasons just like this, then again, front running galore. Instead, you cite tariff reasons and you cite arbitrage reasons where it was you could make more money by taking delivery in the United States. I think that's all hogwash. I think that was a cover.
Don't let a good crisis go to waste. That's what you're saying, Andy. Yeah.
No, I just think it was a cover in order to bring that home, because if they said we're going to reshort because we think we need to back the treasury, that would not be a wise move. But if everyone thinks it's to front run tariffs and it will just end up going right back down the road, well, that's different. And I think it was a mistake. I said that since day one. This is far bigger than just tariffs, because the amount of imports, not just of gold, but silver also, are so far outside what is normal that I think it speaks well more than just tariffs or arbitrage. Far more. But that was a good cover for it.
All right. Well, Andy, you certainly got folks' attention with this. I know you and I were talking a tiny bit about this hypothesis of yours right before we hopped on here. Glad you got it out. I'm sure we'll want to dig into it a little bit more depth. Let folks, with the audience themselves, ask questions about it. We'll try to do that one of the next times you come on. Gents, we're going over the hour here, so I need to start winding down. But we'll go a few more minutes if you guys don't mind. One, because I did mention it earlier and I've seen a couple questions about it, so I feel we just need to reach out and grab that rail, third rail or not. But Bitcoin, Jason, I know that you're a huge fan of specie bullion for all the reasons you mentioned, and you've got your company totally aligned around that. A lot of Bitcoiners would say, "Hey, guys, this is what Bitcoin does too. Where's Bitcoin in this? Or maybe Bitcoin's the superior solution." Recently, there's been a lot of talk about stable coins, and people saying, Andy, that's how they're going to support the treasury market, which is that all these new stable coin providers are going to need to back those stable coins with treasury bonds, and so that's going to be providing a bid for them. How do you see Bitcoin playing in this ecosystem that we've just spent the hour talking about? Jason, let's start with you.
Well, I think that I'm a big proponent to the whole digital cryptocurrency universe, and I'm not like one of these people who wants to have a war of words between gold and crypto. I think they're two very different things, and both have their benefits and their challenges. Cryptocurrency, but for instance, Bitcoin is currently a risk-on asset. We saw that when Russia invaded Ukraine. The price of stock markets and crypto tanked.
Right. Sorry to interrupt, but by the way, Bitcoin hit an all-time high just a couple of days ago. The day we're speaking, it's up several percent. It's back close to 120,000 a coin. So it's risk on or not, it's doing great right now.
Yeah, it is, and I've got nothing against it at all. But I just want to say it's very different to gold. Gold is the thing that's being held by central banks. It's overtaken the euro as being the second reserve currency on the planet. So it is a tier one asset. It's written into the Constitution, and I think it's fantastic that this administration is getting behind making it very clear what businesses and platforms and entrepreneurs can do with cryptocurrency, because I think it was an absolute crime the way the last administration was behaving towards cryptocurrency. As an entrepreneur, I know what it's like to be building, how hard it is to build innovative new 0 to 1 businesses, and to have the rug pulled from under your feet, at a moment's notice, or to be worried that you might do because of an administration that doesn't want to tell you what the rules are, but is happy to use the rules against you, it goes against everything about entrepreneurship, building great capitalism, all of that stuff. But the reality is that in the Constitution, unless there's going to be, as you said, a change to the Constitution, there's only gold and silver that can be made legal tender. That's just a hard fact, and it's also a hard fact that gold is accepted by everybody on the planet and has been throughout time and space, and still is. Lots of people don't like cryptocurrency, even though it's doing particularly very well. But gold, if I offered gold to anybody on the planet, they'd take it off me. It is the universally accepted store of value. It is the currency of last resort. But that's not saying anything against cryptocurrency. Crypto is great, and I'd love the two ecosystems to be interchangeable. In fact, we're just waiting for various rules and regulations to be clarified so we can build a bridge between Glint and the crypto universe, that people can be able to move from a digital store of value into a physical gold one that can still transact. I mean, there should be choice on this planet. This is why the legislators are saying this is not, this constitutional gold stuff isn't replacing the dollar. It's a choice, and you should have the choice to be able to move into cryptocurrencies too. As long as things are being done properly, then the ecosystems should be able to flow from one end to the other.
Okay, Andy, any concluding thoughts on this?
One of the things that Judy said when I interviewed her as well, Adam, was that she would envision stable coins issued off of this new gold-backed Treasury. Stable coins are a way to increase demand for U.S. Treasuries and not be inflationary, right? So they're not, you're creating that, you're not creating dollars, and you're really not even creating demand for dollars, you're creating demand for U.S. Treasuries. So all these people who think they are leaving the legacy system, actually in a weird sort of way, you want to think PSYOP, you want to think misdirection, they're actually supporting it. Maybe this is why you're seeing such bipartisan support for these bills, because they understand that the demand for the Treasury, the natural organic demand, is dying. So let's create the crypto sphere and then peg it by U.S. Treasury, or peg it by, stable coins being backed by U.S. Treasuries. It makes you think a little bit. And when I think about Bitcoin, I did an interview with Paul Barron, and I asked him about this, and he said he was very scared. All you got to do is Google Willow chip. That's made by Google. It's called the Willow chip. It is the quantum computing. It does in less than 10 minutes what the world's fastest supercomputers can do in 10 septillion years. Now, I didn't even know what septillion years was. It's like 10 to the 26th power. It's so far down. I mean, it would take a million lifetimes for this to happen. Yet this new chip, bang, done. And I worry about anything that's in the digital sphere. And you wonder, it's like the further we go down this digital road where quantum computing becomes so extreme, is anything safe anymore that is digital? And you have to stop and wonder, if it can do that many computations in what the world's fastest supercomputers take 10 septillion years, how safe is anything like that? But gold in a vault, tier one asset held in a vault, you don't have to worry about being hacked, if you will. So I'm not saying that I don't think that there's a role for Bitcoin. There is, but as it backing the sovereignty of the government, not quite sure. As far as stable coins are concerned, yeah, and you have to think, is that really something that they want, or is it something that they know that they have no choice? How do you find demand for U.S. Treasuries? Well, you back it by gold and you issue stable coins, because you're losing organic demand. So let the world buy cryptocurrency and trade throughout the ecosystem and dollar-based stable coins. You are supporting the legacy system. There's far more layers on all of this than it's just simplicity. Yeah, that'll do it. Well, you have to think about the motivation of those that are allowing that to do it, to happen. And I don't know, maybe I'm a little more cynical, but it is my mission, and has been, especially bringing Michelle on, to unite the two communities. We have far more in common than we do not, and we should be together rather than decisive. And this mutual exclusivity is silly. I think that we see the world in many ways somewhat the same. But the Bitcoin community wants to profit. We want to preserve. But together, our portfolios and our arguments are much stronger.
Okay. And yes, it's all under the sound money umbrella. So we'll have to leave it there, gentlemen, just for time. But these are big issues, folks. They are in process. Which is why we'll have Andy on every couple of weeks, and Jason on as often as we can get him here to join us. If you've enjoyed having both these minds on today, please let me know your feedback in the live chat there, or in the comments if you're watching the replay. Obviously, we want to continue to deliver the type of experience that you guys value most. So as we start to wrap up here, Jason, like I said, we'll have you back on at some point to do a real deep dive into Glint. For folks that want to learn more about it between now and then, where should they go?
The easiest thing to do is go to glintpay.com, or just download the app from your favorite app store. It's easy to set up within just a few minutes, and you can try it out yourself.
Okay, wow, very concise. All right, and Andy, want to reiterate that you are the Miles Franklin is the official endorsed precious metals solution by Thoughtful Money. So for folks that want to get some help from you and your team in thinking through if they want to start or advance their exposure to precious metals with their own personal wealth and get some help in thinking through that, where should they go?
Best way, especially for your listeners, is info@milesfranklin.com. Send us an email. Make sure you came from Adam. Any questions you've heard here, or any of the interviews we've done, or any questions on your mind, from macroeconomics to physical metals or anything in between, we will make sure that we send a price list. If that's all they want, just say, I want the price list. And we will make sure your listeners are getting the best price in the country personalized white glove service. And if you don't get a reply back fairly quickly, check your spam. If you want to be contacted, put your phone number down. But info@Miles Franklin, saw it on Adam Taggart, and we treat those leads, those client requests, as the most important thing in the world. And I'm sure that we'll be able to prove that pretty quickly to your listeners. So info@milesfranklin.com would be the best way.
All right. Thank you, my friend. Folks, that's on the screen right there, but also I have the links both to info@miles.franklin.com and GlintPay in the description below this video. Gentlemen, it's always a privilege to have you here. Folks, if you've enjoyed this, please let Jason and Andy know by hitting the like button and then clicking on the subscribe button below. As I've been saying recently, we're trying to hit 150,000 subscribers for this channel by the end of the month, which is my birthday. It would be a great way to celebrate. But also it helps you because you'll get alerted every time there's a new video here, so you won't miss them, hopefully. But it also really does just help the thoughtful money movement because the more subscribers this channel has, the more love that the YouTube algorithm shows this channel in sharing these educational videos with other like-minded investors like you. Gentlemen, such a pleasure. Can't thank you enough. Really look forward to having you guys back on soon.
Likewise. Good to see you guys. Good to see you, Jay. I think I'm going to grow a beard next time so that these 3 pictures in a row look even better.
That'd be great.
Thanks, Adam. Nice to see you again, Andy.
Adam.
All right. And everybody else, thanks so much for watching.